Damon here from StockBarometer.com. Today I'm going to be giving you my top 5 stock picks for the week of March 2nd, 2015. The first 3 stock picks are actually up gaps, breakaway gaps that we want to get in on early. So if you can buy these on Monday and ride the trend for the following week, that would behoove you. Now, what we're looking at are gaps that have broken away from the trading region and have a high volume. These type of gaps, 70% of the time, will continue to widen. In other words, they will continue to go upward in the price trend. So what we're looking at are 3 of these stocks that have such gaps. The first one is Clean Energy Fuels Corporation, CLNE. Get it on this Monday and you will likely see an upward trend. I'm not going to do a lot of technical analysis for this week's stock picks simply because the first 3 are all similar in that we're just looking at these breakaway gaps and trying to get in on them early. So there's CLNE, then we have CYCC, technically a penny stock. Again, we have a breakaway gap. We see the trading region was more or less flat. Some news event might have spiked this, but the volume was still quite low. It evened out. Another possible news event, or maybe gossip of a news event, caused the price to spike a bit. And then some news event, the real news event coming out to the mainstream media, probably made this stock price jump up. You can look into it if you're interested. It really doesn't matter. What matters is we have a gap that is now outside of the standard trading region and it's affiliated with a very high volume. Get in on this on Monday and you'll likely see it ride upward. We saw that actually this stock price topped out last Friday at almost 2.25, so it's likely to hit that again. That might be a resistance point. If you buy at 1.50 and it goes up to 2.25, you're looking at maybe 70% profit within a week, which is amazing. Now we're going to look at GPS, which is Gap, a clothing store. Very ugly clothing in my opinion, but high stock price. This is a little more interesting in that the volume's not that much higher than normal. And though it is technically outside of the trading region, we do see it hitting a point that it hit earlier in the month. So this one's a little more risky, but at the same time, you're able to probably get a good amount of money if you were to buy a call option on this instead of buying the stock. Simply because if it does go up, like I suspect, for every dollar it goes up, you're going to make $100 per stock option. And if you're buying like a $100 stock option, that's $100. That's a 100% profit, or 200%. 200% of what you put in, 100% ROI. So this is a decent one. It's more highly priced than the other 2, but this might be something to not only buy for the short term, but you might want to invest in it for the long term. This is a gap that probably will not fill because of the high volume. So those are the 3 breakaway gap stock picks for March 2nd. We're going to look at a couple more technical stock picks here. The first one is MDLZ. At least we'll reset this to 1 month. Alright, so here what we're looking at is we actually had a breakaway gap. We just looked at 3 breakaway gaps. Now we see what happens with a breakaway gap in some instances in this chart here. Sometimes the breakaway gap, which we see on February 11th, goes up a bit and then holds at a standard trading region. At that point, either the gap, after it's trading and holding and more or less trending sideways, after that, you will either see the gap fill or you'll see that this breakaway gap is confirmed by a new upward trend. Now that could take a while, and the best way to look at when that's going to happen, when that shift in the sideways momentum is going to happen, is by watching the candlesticks. And usually two of the best candlesticks to indicate that are the evening star candlestick and the morning star candlestick. This is a very interesting stock because we see a evening star candlestick here, which would imply a downward trend. But the next day we see a doji star, which is indecision. And then we see a shift backwards so that we have something that looks almost like a morning star. So what we're seeing here is indecision. The investors don't know which way to go. But my best guess is that we actually have found a level of support here. Though it looks like we also have a level of resistance, I don't think that's necessarily true. The support looks to be at around 36.5. The stock has not dropped below that after this breakaway gap. But of the day of the breakaway gap, we almost reached 37.50. I think with the momentum that we're going to see based on this three candlestick pattern, we are prone for an upward movement, and that could be actually a significant breakaway, but it's something we should either watch for the next week and then get in on once we see it going up, or get in now because at the very least we have support. And if we get in on Monday and we find that the stock doesn't go up, at least we know that it can't fall. Well, it probably won't fall below 36.50. So that's something that we can get out of easily without losing much money, even if we are incorrect in our prediction. But I'm going to say that there is quite a bit of potential for this stock to go up, and I recommend you get in on it on Monday. Buy the stock, don't buy a call. Last one we're going to look at is NUGT. NUGT is actually an ETF. Basically, it tracks the price of gold, but it gives you 3 times the leverage. So if gold shoots up, this will actually shoot up more. In a way, it's better than buying gold, but it's a little more risky because if gold falls, then this will fall 3 times as fast. What's interesting is that during the past week, we saw it starting to move upward. And while it moved upward, it filled this area gap here, which should have filled anyway. We could have actually gotten in at a low point, but we wouldn't have known that this was a low point at the time. And if we got in at that low point, we could have went from $14 to where it is now and made $2 profit per share. But there's also a gap right here that's going to fill most likely. And that's what I'm looking at, and that's what I am basing this recommendation on. However, there is a level of resistance, probably around a little above 16. If we see this ETF break that level of resistance, that level of resistance then becomes a level of support, which means the stock more or less won't be falling, and this gap will be filling. So we're going to set a price target at about $18. And again, although we missed that opportunity to make $2 moving from around 14 to filling this gap here, that opportunity wasn't really predictable because we didn't know where the low point was. However, now we see you could call this a bullish kicking candlestick pattern. This is very indicative of an upward momentum, and if that momentum is able to break the resistance, then we're going to probably see the stock reach the level of 18 or even more. So this is another recommendation for the week of March 2nd, 2015. That is it. I'm going to place those recommendations back up on the screen for a second before I turn this video off. If you have any questions, leave them in the comments below or give me an email at damon@stockbarometer.com. Take care.